right, so it's Wednesday, April the 9th, 2020 at 12 p.m. And welcome, Veron, back to our panel of guests. And Veron is a mortgage broker with iConnect Mortgages, Dominion Lending. Welcome.
Thank you for having me on your call, Jennifer.
Yeah, excellent. So want to ask a few questions that may be on the minds of some of our viewers. And one big question that I seem to be seeing a lot of, and you're probably hearing as well, is the question around, will deferring your mortgage during COVID-19 affect your credit score?
Great question. And I've been hearing from a lot of people, everyone thinks it's going to affect the credit. I check with pretty much most of the lenders that we work with. They guaranteed it will not affect the credit score or credit bureau. So what happens is it is actually considered as a deferred mortgage payment. So banks has a capacity to program on their end as a deferrals. So I worked in TD Canada Trust back in 2007. They had a deferral program for the clients who cannot keep up the payment, and they still have a mortgage payment. They call it mortgage vacation sort of thing. So you have a privilege to defer the mortgage payment. So what they do is they program in a way as a deferral, so there's no payment comes up.
So basically, instead of it being paid on the front end, it's now getting moved to the back end.
Exactly. So it's going to be capitalized.
Okay. So it's different than not making a payment altogether, making a late payment.
Exactly.
Two different things.
Late
payment or not making a payment in that respect because you're late or just non-payment will affect your credit. But if you contact the lenders and tell them, you'd like to defer and you get approved on that through the lender, then it will not impact credit.
That's 100%. I agree with you 100%. So it's not, so they report to the credit bureau if you miss a payment. When you defer a payment, it's not a missed payment, it's a deferral. So it will be programmed on the back end, so it's not going to affect your credit score. And some of the small lenders, they don't even report to the credit bureau.
Yep.
Okay. So you don't need to worry much about your credits get bruised during the COVID-19 deferring payments. Absolutely not.
Okay. And here's another question. If I'm working with a buyer or a buyer is in the process of buying, what are the credit requirements in today's market? We're talking right now during COVID-19. What are you hearing from the lenders, or what are you seeing, Veron?
So things are changing on a daily basis.
Yeah.
So I know we spoke yesterday, and today, actually after we spoke yesterday, if you're buying a investment property, there are some lenders, not all the lenders, some lenders, they don't want to use a line of credit or refinance your existing home or principal home as a down payment.
Okay.
So it's a change compared to what we spoke yesterday. And what some other lenders are doing is, especially with the B lenders, like a trust company, is being considered as a high-risk lenders to begin with. So what they are doing is they actually doing, they are not funding the mortgage for self-employed, such as Uber drivers, construction business, and restaurant owners.
Now, is that those are people that are currently buying, but somebody in that situation that may have already put an offer in before all of the COVID-19, are they being impacted by that?
They are not being impacted at all, but these are the people who are currently looking to make a transaction. So on a bigger scale, so as a mortgage broker, we work with the major banks, trust companies, and a monoline lenders. So if you have a stable job and if you have an income that's supporting it, and if you're still employed, the business is usual.
Okay, so stable job, lenders making sure you're still employed, and they're doing their due diligence, things are still moving forward. But certain occupations or certain professions that fall into a certain category where their income sources may be a little more, what's the right word?
Income fluctuates. Like it's a high risk industry.
Higher risk.
Yeah, high risk. But also it's very important, like whoever's listening. So for example, if you had a purchase done in February and your closing is in May, and if you've been laid off temporarily, don't need to worry about it. Actually, we are helping a client right now they did the purchase in January, and she works for a doctor's office and currently is being closed down. And the lenders wanted us to get a letter saying it's a temporary layoff and she'll be returning back to work after the COVID-19 pandemic is over. No issues. So don't get stressed out or don't panic if you lose your job and you got into a contract to purchase a home.
Even
Lenders will.
even if you're on unemployment or collecting the emergency fund
That's
from the
right.
government, like any of that stuff. Okay, all
So
right.
most of the lenders are honoring their approvals on a purchases. So this is, I'm talking about purchases. If you
Yes.
got into a contract prior to March 25th, 2020.
Okay.
So they're honoring the approval. They don't want you to walk away from the deal.
Okay.
Um,
That's
but
good.
even right now, if you are purchasing, your job is guaranteed. I actually helped a client today. He started a job with Ministry of Health on
Yes.
March 30th.
Okay.
Went to the lender. The lender was perfectly fine. He has a track record of making a similar income from the previous job, and he's working for a government. They called and they verify the employment, and it's a Ministry of Health, and it's a very secure job in this market. Even though
Yeah.
he's only started on March 30th, the lenders are okay with it.
Okay. All right. So are you finding overall the lenders are getting stricter on the lending criteria for buyers that are looking to, whether it be now or say a couple months down the road, they're looking at possibly buying?
By case, right?
Okay.
Are they doing extra due diligence? Yes, but are they not approving the mortgage because of the COVID-19? If you're qualified, the business usual.
Okay.
Business usual, in my opinion. Uh, Compared to some trust companies like B lenders, they are taking extra precaution because they don't want to lend because they use non-traditional way of confirming the income. If you go to the home trust or equitable bank, they qualify the clients not with the notes of assessment, not with the T4s. They take a non-traditional income. So those lenders have stepped down a little bit in terms of the risk, but major lenders, banks and monoline lenders and insurers, CMHC mortgages are still approving the mortgages with a 5% down. So they haven't taken a different approach at all. It's a business as usual.
So let's summarize that. So basically, if you are a square peg fitting in a square hole, which would mean you would go with what we call an A lender, or what you call an A lender, which would be your major banks. Like there's many of them.
Yeah.
So if they can go with those lenders, the credit's good, job stability's there, all that. But then you've got your B lenders, which are people that maybe aren't a square peg fitting in a square hole.
To the specific industry. For example, if you are an Uber driver, it's a non-traditional way of confirming the income because we know no one is taking an Uber. Let's say if you're a restaurant owner, most of the restaurants are being closed down. So those industries are specifically being looked down as a high risk industry, and they may have a tough time getting it qualified.
At this time. We
At
have to
this
be
time,
specific that
very
it's at
specifically
this time.
during in this time. But once this is over, the business is usual. So lenders want to be a little bit cautious, which we understand. It's going to be a short term. I'm sure we will come through this, and business will be usual.
Okay. All right. Well, that's excellent information. Thanks again for taking the time today and providing such great insight and to the questions that I put forward to you. Now, you and I will be doing this Q&A weekly for a few weeks here. And so if any of our watchers have any questions, feel free to post them in the comments below, and we'd be more than happy to try and answer the questions for you that you may have or what's sort of on your mind, and or you can direct message us, right?
Thank you.
All right. Thanks so much.
All right.
Have a great day. And
have a great long weekend.
yes, enjoy the long weekend.
Okay. Thank you. Bye-bye.